It's time now for Money Management Monday. Today we're here with Dow Chemical Employees Credit Union accountant Alison Lutren. Thanks so much for joining us today.
Yes, thank you.
So today we're talking about a big topic, how to protect your credit score. So how important is that score?
That score is extremely important because it's looked at for many different things. So obviously any time that you want to get credit card, personal loan, auto loan, anything like that, your credit score is going to affect your interest rate, which is going to affect your payment amount, that kind of thing. It also affects your insurance premiums, unfortunately. And then it affects things even like getting a job. People don't realize that they're going to pull your credit, and depending on what you're doing for your job, they may really make a decision based even on that credit report or that credit score. Also things like renting, utilities, anything like that, they all look at your credit report and your credit score. So it's an extremely important score.
So what is considered a strong score then?
So a strong score is going to depend on the lender. So I feel it's really hard to just push out a number at you. The highest is going to be 850, so the closer you get to 850, the better score that you have. But every lender is going to be different. So to some, their A+ score might be 720 and higher. Others might be 695. It just kind of depends on the lender itself. So you should just strive to always get up to that 850 range. But I would also say if you're new into getting credit, remember that your score is going to start lower. So as you're younger and you're kind of building that credit, the trade lines on your report are going to be what's important too. So you want to make sure that you're not just looking at the score, but you're looking at the things that are actually creating that score.
Sure. So what are some of the common mistakes that can hurt your credit score?
Common mistakes, number one is missing a payment. The longer that you go out, the worse your payment's going to be. Things like that are going to really affect the score. Other things that are going to affect the score are also taking out too much credit and closing credit lines. So when you go to stores and they offer you their credit card and you say yes every single time, it's going to, on your score, it's going to reflect that you're getting a lot of credit. What's going to happen is you might use that card one time to get that discount and then you don't use it again. So in a couple years, they're going to close it on you, and you could have multiple cards close at the same time, and closing a card is going to drop your score. Not for a long period of time, but it is going to drop your score. So you don't want to look like you're asking for too much credit or closing credit too often. You also don't want to use up too much of your credit utilization. So you want to keep your ratio at about 30% or less. So don't max out your cards and try to use as little as possible.
So what if you want to improve your credit score? How can you do that?
You kind of want to do the opposite of all the things I just said.
Right.
So make sure that you make your payments on time. If you can't make a payment, contact your lender. Try to stay, if you can't make a payment, try to stay below the 30-day range so it doesn't get reported. Make sure that you're really being conscious of the things that you are taking out, your credit that you're taking out. So maybe make sure that you're just really only asking them to pull your credit on certain things, and then try to keep your utilization as low as possible. And then just remember that the longer you have something to, the deeper you're going to have that trade line, and then the better your score is going to be.
So how do you check your credit score?
You can check your credit score actually at annualcreditreport.com every year. So there's 3 credit bureaus, and you are allowed to get each one of those bureaus once a year. So the best thing that you can do is go to annualcreditreport.com, get your first credit bureau, so ask for your TransUnion, 4 months later go out, ask for your Equifax, 4 months later go out and get your Experian. So that way you can track it all year long. There are other kind of apps and things, I know, like mint.com, Credit Karma. Even your credit cards, some of them are now offering you a credit report for free. You checking your own credit doesn't affect your score. So you can check it as much as you want to check it. If you do want to pay for the report from the actual bureau itself, if you've already gotten one and you want another one, they can't charge you more than $12. So it's actually really easy to get the report. Just make sure that you're checking it at least once a year, but we prefer every 4 months.
Sure. And how can errors on your credit score be fixed?
The easiest way to fix them, there's multiple ways, but the easiest way to fix them is to actually go directly to the bureau that you see the issue with. So any of them, actually. You can go to one of them, and you can actually dispute right on their websites. And if you dispute with one, it's going to dispute with all 3. So if it's on all 3 of your credit bureaus, that's going to help you. That's the easiest way. You can use annualcreditreport.com or the Consumer Bureau in order to do that, but a lot of that's going to be paper and it's a little bit harder. So I would suggest utilizing the actual bureaus themselves.
All right. Well, thanks so much for being here today. Some really great tips on maintaining that credit score.